Hey there, everyone. It's FX Videos here with your daily stock market wrap-up and an important look at what could be in store for tomorrow. Today was full of moves, some unexpected shifts, and quite a few headlines that left investors buzzing. Let's break it all down and look at how October wrapped up on Wall Street, and get ready to start November strong. Alright, let's dive into today's numbers. October 31st saw a mixed close across the major indices. The Dow Jones Industrial Average wrapped up the day with a modest gain, adding about 0.4%, bolstered by solid earnings from a few heavyweight companies. The S&P 500 was a bit more cautious, just inching up around 0.1%. Meanwhile, the Nasdaq took a slight dip of 0.3%, as tech stocks saw a little selling pressure. Today, we saw strong performances in some sectors, like energy and industrials, thanks in part to a spike in crude oil prices. On the flip side, tech and consumer discretionary stocks lost some ground as concerns around rising borrowing costs continue to make investors wary. Let's take a closer look at what made headlines. Today, Apple released its earnings after the bell, with slightly underwhelming sales figures for the iPhone compared to what analysts were hoping for. While Apple has been a market driver, this dip in iPhone sales sparked some worry among tech investors, and it may play into how the stock starts November. Then we have ExxonMobil, which saw a boost today. With the recent rise in crude oil prices, energy companies are seeing a surge, and ExxonMobil's strong quarterly results added even more fuel to that fire. On the energy front, crude oil jumped above $95 per barrel, which is an eye-opener. We haven't seen these levels in months, and it's likely to impact not just oil companies but potentially the broader market if it persists. We can't discuss the market without touching on economic data. Inflation continues to linger above the Federal Reserve's target, with consumer prices showing a slight increase last month. That said, investors are eyeing the Fed's upcoming meeting next month to see if more rate hikes are on the horizon. Jerome Powell hinted last week that the central bank might adopt a wait-and-see approach, but any hint of tightening could quickly shift the market's mood. Alright, now let's shift gears and look at what we should be keeping an eye on tomorrow, November 1st, based on today's moves. Here are a few sectors and stocks that could be active tomorrow. 1. Tech stocks. With Apple's earnings out and weaker iPhone sales reported, we might see ripple effects across tech. If Apple opens lower, it could drag down other big names in the sector. Keep an eye on Microsoft, Nvidia, and Google, as these giants tend to sway the Nasdaq. 2. Energy stocks, particularly those tied to oil production like Chevron and ExxonMobil, have been rallying. If crude oil stays elevated, we might see this trend continue, as higher oil prices can mean higher profit margins for these companies. 3. Financials. Banks like JP Chase and Goldman Sachs are also on my radar. With rising interest rates, these financial powerhouses tend to benefit. Earnings season showed positive results from most big banks, so this sector could get a boost if interest rate concerns ease slightly. Let's talk big picture. Going into November, there are a few broader trends to watch that could impact not just tomorrow's market but the whole month. 1. Fed policy. As we mentioned, the Federal Reserve's stance on interest rates is a massive factor. With inflation still above target, the Fed's next moves will be crucial. Any hint of a more hawkish tone or a potential hike in December could put pressure on both stocks and bonds. 2. Oil prices. With winter approaching and oil prices on the rise, there's potential for higher fuel costs. If oil continues to climb, it could ripple through the economy, impacting everything from travel stocks to consumer spending. 3. Corporate earnings. Although the bulk of earnings season is behind us, some major players are yet to report. Their results will be key in setting the tone for November's trading environment. Now, let's look at some technical analysis to see where the major indices might be headed. Starting with the Dow, we're seeing it bounce off a key support level around 32,800, showing signs of resilience. If it can maintain support here, it could see another rally, especially if economic data next week comes in favorable. For the S&P 500, it's hovering around the 4,100 mark, which has acted as a pivot point recently. A break above could signal more gains, while a dip below may indicate caution from traders. Finally, the Nasdaq saw a pullback today, closing below 13,000. Tech stocks have been more sensitive to interest rate pressures, so we'll want to see how the sector responds to tomorrow's early trading. Alright, so what's the game plan for tomorrow? Here's what I'll be watching closely as the market opens on November 1st. First off, keep an eye on the tech sector for potential oversold rebounds. If Apple can shake off today's news, we might see a broader tech rally. For those focused on value stocks or dividend payers, energy and financials look appealing given their current strength. And for the cautious investor, sticking with defensive sectors like utilities and healthcare might be wise, especially if we get any signs of economic slowdown. Now, one thing to keep in mind is the market's seasonal trend. Historically, November tends to be a favorable month for stocks. But as always, past performance isn't a guarantee, so stay sharp and stick to your plan. So there you have it, folks, your October 31st recap and an outlook for tomorrow, November 1st. Whether you're an investor, trader, or just keeping tabs on the market, staying informed is half the battle. Thanks for tuning in, and if you found this update helpful, don't forget to like and subscribe for daily insights. See you tomorrow for another market update.